Good evening. This is Ken at Tortoise Capital with Nightly Strategy Podcast for October 18th, 2022. Let's take a quick look at our 150-day look back. We had a slight improvement today, closed through the PSAR, and we should be ready in about 2 days for a PSAR flip, which will occur something like this. So 360 is shaping up to hold nicely as a support level in this theory. If it holds, the next target would be 400, and if it can break through here to the 30-day high at 410. So we have some reasons for technical hope right now. A collapse below 360 leads you to the 30-day, 50, 150-day, and 10-day low at 350, and then the next target at 330. Looking at the daily charts, going back, 5, 10, 20, and 30 days, you can see that we've got the RL10 crosses the baby dragon, a support level double bottom here at about 356. Price crossed the PSAR. That's if this weren't a bear market, that would be worth a shot. I would wait until the morning to see what we get. But it was a relatively low range day. It's above the hump of the RL10, so next target really is this, about 390, then 400. So $10 steps on the way up. Looking at the 30-minute chart, so this is our 1 day. After yesterday's gap up and holding pattern, we get another big gap up, but it couldn't hold. Harsh sell-off to the PSAR, which held, and it closed roughly at the top of the dragon. So this is a perfect critical state ready for sharp move up or sharp collapse back, so it should be fireworks tomorrow. Looking at the sector performance, we'll start with our baseline S&P up 1.17. Weaker were techs at 0.8, treasuries at 0.23, emerging markets basically flat. Tesla was a marginal 0.38. To the upside, really clustered right around the market. You had the Russell and the Dow, really not much to choose from there. Strongest, marijuana, Brazil, materials, ARC Innovation, finance, wheat and precious, staples and discretionary, and clean energy. So quite a wide range of outperformance, to be honest. Weakness down here in agriculture, commercial real estate, blended commodities, Bitcoin, VIX, oil, Ethereum. The semis doing badly here with Intel. Large negative move, 2%. Texas Instruments also underneath the broad market. And NVIDIA. So all three of the semis, NVIDIA, Texas Instruments, and Intel, underperforming. Take a quick look at sniper trade of the day. Looking at U.S. Steel. So we had the OR3. It broke to the upside, so we're long with a standard risk box. That failed quickly for a scratch. I took the short on the PSAR breakdown. On this rollover, you had the RL10 cross the baby dragon. RL10 left the dragon and price hit the PSAR, so that's a standard short. in a bear volatile market, aiming for return to yesterday's close. And that's didn't quite get it, but it was close. So 1 unit of risk, about 1.5 units of reward. There was the reversal and the crossing of the baby dragon, pretty much where support was before. This is the SSC, quick scratch, stop and reverse, quick scratch, a double bottom and an SSC re-entry. There was about 1.5. Kata 2 continuation, about half. I waited for the collapsing dragon to hit here. This could have been short, but I was respecting the upward move. But I did take this one on the collapsing dragon and the R10 wiggle, standard risk box. About half an R, and that was enough. So this was hitting a lot of singles today, but came in about a little over 3. All right, let's take a look at the traders today. All right, we had Constantine with a double top. He played the 1-2-3 short. Gets 1R off a standard OR3 breakdown. And that's in the S&P itself. Woj plays WMB3 and Kata 2s here in the Aussie dollar. Quick loss, recovers it, takes a break, gets paid once with a scratch, breaks even here, long and a very nice exit, gets 0.3R for the day. Devon Energy plays the OR3, gets paid a fraction. He stopped trading, misses the favored move. Tesla, big gap up, harsh sell-off. MMRB is established, gets short, gets paid. There was another opportunity here. But there's a reason why he stopped trading those. His work in the cryptocurrencies just absolutely crushed. So quick scratch and then a smash for 2. Quick scratch, stop and reverse, gets lucky, took the gift for 8.7. Same gift, 5.5, so total of 18 for the day. Not too shabby. Nolan in the, let's see, this is the Aussie on the 5. This is not a Kata 2 unless there was a lower low back here. This is just a PSAR flip, and I don't mind that. That's a good quick scratch, but you should then be taking that short and get paid on the VWAP reversal. The collapsing dragon would be, well, this would be a Kata 2 to the downside and a collapsing dragon here or here. That's a good play. This is the SSC. This is the Kata 2 right here. Good scratch that should be, and then a Kata 2 you should crush with the second position and then take the exit at the dragon. Here is a CD. So I'm wondering why we're not on that. There's a A second break here. I would take the one as it crosses the VWAP with an exit at the edge of the dragon, and then I would take the kata 2 here as this rolls over instead of waiting for this. So we could have, I think, probably had 4R out of this one with good play. In the Qs, this looks like a short and cover, a long and cover, kata 2 reentry, which pays for most of that. Except we let this last a little too long. Our PSR flip here, I would take that one. This little shelf breaks. That's a good, reasonable alternative. On the break of the VWAP, we could be short here, and all of that should exit here. And then when this finds support, where it found support, there's your SSC. Here's the kata 2. Second opportunity in one of those two places. I would prefer this one. Good exit, but then we got to re-enter, so this one should have been about 4. Or could have been about 4, I would say. Luke, 5-minute Aussie, just smashing this one out of the park. Gets the owl entry, and that would be the SSC. He gets the owl as the dragon, and the RL30 roll up. I like this either here or here for a second position because you're already 3R in hand, and you've just broken that, and you're resuming the long trend up. And then on this excursion, I like the 1, 2, 3 entry here, which is right at the edge of the dragon. I think we gave back a little, but you only had one position on, so that's all right. So that's 5 execution R's. We can live with that. Here's Arch with the 3-minute Aussie. Ended up scratching because of all this chop, and then didn't take the kata 2s until we got to here. So there was a trade here and a trade there that was available, I think. We might have been able to play this one on a rejection of that high. A little too choppy in here. All right, let's look at our daily reports. Dashboard 1, we remain in bearish volatile. Slight improvement on the 2 and the 10-day lookbacks. We're above the neutral line. Abnormal risk Z. We are in risk-off conditions, poised to make a large move in either direction. These red lights are warnings about possible failures of the dead cat bounce of these last couple days in diamonds and euro. So if we get weakness tomorrow, and if they are worse than the S&P, those are 2 excellent short candidates. Lots of red light warnings about overreactions to the downside. That's in case of failure, break glass and get short those. Otherwise, tentatively play to the upside. A handful of dojis, only Tesla tests out better than 2 to 1 on the auto framer. In the ETF 30s, a handful of auto framers looking pretty good. A breakout to the upside in the Dow and in industrials. That's the nature of that dead cat bounce warning. That's pulling ahead and maybe subject for some short action. Oil had a breakdown on the 10-day. The usual suspects in the auto framer, these are the ones that are the furthest from their 10-day high. Gold, silver, treasuries, utilities, oil. Those are all the defensive plays while the equities are doing fairly well. Tesla remains intriguing at 2 to 1. I think it's still undervalued. 3M, McDonald's, and Travelers in the daily squeeze. Only 3 Godzillas left in the S&P, and only Ethereum in the tactical set. That's a double quiet stealthy Godzilla. These had large one-day moves, and so I'd look for some additional continuation momentum on those. I'm interested in the most volatiles now as the market is trying to break out to the upside. So you could look on the most volatile for the double greens because they are large on 1 day and 5 day volatility. The ones in the most quiet that are red but then also green just had their first day of big upward move. So FCX, Advanced Micro, and Win, especially Win because that's a pretty speculative frog champion. I like that for a 1 day move. Standard stats for the auto framer from our TC2000 bundle. That's how you swing trade 1 day at a time. And then these are the sniper stats for our tactical symbol set. In MACD 4 Seasons, we're seeing the ETF still being dominated by the winter and spring below the zero line, although the individual stocks are doing a little bit better with some of the industrials over here. Tail of the tape on the multi-frame time frame NDX. Key winners: Boeing, American Express, Merck, and J.P. Morgan. Really, lots of things to choose from on the ETFs, but especially you want to look at the Dow, and the industrials had some real strength today. This is a warning about it could not break out higher than the previous gains, and then the fact that it closed with a red candle shows some latent weakness and conservative risk management as people try to lock in the gains of the last 4 days. It's been choppy, but there's some gains. All right, that's everything we got for tonight. We'll get this published and posted and be ready for these guys tomorrow. Fireworks tomorrow.